can't see you, Winston. Why are you hiding? Felix here, and welcome to this very, very, very pre-market live. We're so excited that market's going to open again on Tuesday. I thought I'd do a live stream on a Monday because what else do I do with my life? No, but in all seriousness, I love these days off actually because it gives us a beautiful way to reflect on some stuff, do a little bit of research, zoom out, and that's exactly what I'm going to walk you through. I want to walk you through the 4 sectors here that are seeing massive buy interest. I then want to walk you through what mainstream media is going to be talking about tomorrow probably, so you're better prepared and you understand what they are saying is the next big great rally and why it may be and why it may not be, so you're really, really well prepared. And then we'll have a bit of time to actually just answer questions. So literally ask me anything in the chat and we'll walk through it. But first of all, I asked you a poll here in the chat, and a lot of you guys have already answered that. And that's brilliant, and I'll get to that in a second. That is actually there for a reason. It isn't that just there randomly. I want to walk you through something very, very cool, which I think will be enormously, well, certainly for me, has been enormously life-changing once I really, really understood this. So shall we get going? I think we should get going. Let me share my screen with you here. There we go. Hedge funds just bought the most amount of material stocks, second fastest pace in history. Maybe you think that's really dull because who cares about material stocks, but what does it say to you? It says, well, 2 things. One, they expect likely more tariffs on non-US goods, and that's where they think US material prices could go up. So part of that is tariffs. And the second thing would also be growth. They expect the US economy to grow and for there to be significant investment into industrial stuff that uses materials, construction, and so on. So is Winston sleeping today? He's literally sitting right behind me, but he's refusing to sit up. Winston, sit, up. There we go. There he is. You see, in all his glory. You can go back to sleep now, Winston. So there he is. That's the brain behind the operation. The operations, obviously. So Winston is sleeping, yes. So there we go. Let me share my screen again while Winston snuggles back in. There he goes. Off he is. Annoyed that I'd interrupted his perfect snooze on the sofa. Okay, let me show you a couple of things. I've been talking about this one here since September, I'd say. Maybe a little earlier than that. I can't remember. I think we really got in on this in September with some of the stocks that I share with you guys inside the coaching community. And this is financials. And I picked any random financial ETF. This one's called VFH. Basically, it tracks banks and mortgages and so on. And by the way, if you find it useful to go through the stuff that's really, really trending or about to really, really be trend, again, let me know in the chat. Just let me know if you're finding it useful. Just write useful or something like that. We had a breakout here in late 2024. And then what did we do? Those of you guys who watched the masterclass, you know we pretty much always do this, right? We always go down a little bit and then we rally back up, and we're doing exactly that. So it's been a really, really beautiful rally for our financial stocks, which people often don't think about. I mean, what have we got open at the moment? And again, don't buy these just because I have. It's also all about timing, obviously. FOA, I've got Interactive Brokers. These are stocks, not the actual broker at the moment. Okay, thanks for letting me know there. Nick, Jeff, and Lloyd, and Nicholas, and all of that. Brilliant. So there's lots of ways to play this. Mortgage stocks have just generally done very, very well as well. And that's all on this expectation that rates will come down and things will get better. And bank regulation is going to be less. Now, here is one that I thought might be controversial. Who hates ARK? Who has lost money on Kathy's ARK fund? And let me know. If you've lost money on ARK, write ARK in the chat. And of course, most people did, because it's a very, very, very cyclical thing. And it completely collapsed going into 2022. From, I don't know where it was trading, but it went down about 70% or something like that. ARK was a bag, says Scott. Yeah, and by now I know you no longer hold bags. But Scott, for example, I know you're one of my students, but even you guys who've just watched the masterclass, you'll be familiar with this pattern, right? and then you sort of draw a line across that here, something like that, and then you spot the what? You spot the breakout, and guess what? We got one. We got one at the end of 2024, and that still looks very, very good, actually, if you ask me, because we zigzagged up a little bit. We keep bouncing off the 50-day moving average line here, and we had a marvelous day on Friday, up something like 6% or something. So there is life again in innovation. And of course, ARK isn't a company that invests in a bunch of innovative stocks that are pretty high risk. They charge pretty extraordinary fees for doing so, but it's a good way in one click to capture a lot of high risk stuff. And high risk stuff is making a comeback, which is the way cycles work. So you don't want to own it down here, because then for literally 2 years, almost 3 years, right? All of 2022, all of 2023, actually 3 years. For 3 years, you were a bag holder. You know what was the problem with being a bag holder for 3 years? Who knows? Who knows? 3 years, the last 3 years, how much has the market gone up by? Anybody know? Anybody can look it up? My guess would be 65% plus. That would be my approximate guess. I might be off on that. That would have been the S&P. So the really boring chap that you work with, who's always a little gray and drives a Volvo and is very, very steady, he's up 65%. You, bag holder, are not up 65%, which means what? It means you're actually down 65%, right? Because he's going to go back in now, having watched a masterclass, and he's going to buy 65% more ARK than you. So it's not a good scenario there, doing that. Fox, exactly. You don't make money. ARK, so Tom, there, my friend, you're a bag holder. Sorry about that, Tom, but it's a harsh reality that we all have to learn, and well, don't have to learn, but I hope that you want to learn, and I'll get back to that in a second. Here's another ARK one, and again, you guys watched the masterclass. What are you starting to recognize? You see this pattern, this beautiful little pattern, and then we draw a line across it, and then here we're starting to pop, right? Gap there. For the first time, I've seen a major gap, and I'm seeing also pretty significant volume. So a bit early, maybe to call it a breakout, but it's getting there. And the whole higher risk cycle is going to come back, and there's a lot of money to made in that, especially if you manage it well. ARK sucks. You see, a lot of people, I hate ARK, and that's why it takes a long time for these kind of stocks to go back up, because people really hate it, right? But yeah, it's a sideways motion, and it eventually breaks out, and then you get these monstrous rallies, because most people would have sold by now, right? People give up on these things. Very few people have the patience of. Who is the chap with the patience here? Tom Baker has a lot of patience. So that's an important thing. And that brings me also to a lot of you guys were saying you couldn't make the last masterclass, even though I did it live on a Saturday, because I thought it would have been pretty useful for people. And I appreciate it. All the people of you who showed up, about 2,000 or so showed up. So we're going to run another one live this week on Thursday. And I'll walk you through exactly what we just touched upon here. How do we spot those breakouts? How do we manage the positions, and where do we sell? Because you can miss out on the greatest rally in the world, but even worse is if you miss out on the exit, where you could have taken this monstrous profit, and then you become Tom Baker. Sorry, Tom, I'm picking on you. Who then sits on a stock he's down on significantly for 3 years, which is just sort of like burying your head in the sand. Sorry, Tom, I'm just going to pick on you a lot here today. But you're just, this happens to tens of thousands of people. So by the end of this live session, Thursday, 10 a.m., literally after our usual live pre-market spot, you will never do those things again, right? And Tom, are you going to join me? Are you going to join me? Let me know if you're going to join me live. Write live in the chat if you're going to join me live. You can sign up at felixprehn.org/webinar. Fox has already very kindly posted the link in the chat here. It's also down below in the description if you can't find it. And that's going to be super, super useful. Now, next, I want to talk to you about Tesla, Palantir, yes. And we can also look at some of the other things out there, like BBAI, which keeps popping up here. But I want you to think about something. Most of our brains have essentially been corrupted. We've been trained to get what now? We want sort of satisfaction now, right? And that's why people, they take drugs and drink and that kind of thing. But what I'm hoping is that we can accelerate the pace at which you can achieve something. And most people, and that's why you're putting all these ticker symbols here in the chat, you just want the stock tip today, right? And you keep hunting on YouTube and the internet or on social media and so on for that quick tip that makes you money today, right? Oh, the markets are closed today, you're gonna have to wait till tomorrow. But it's not the way I would approach it. And then there's if you think about it, say you're baking a apple pie or something. I had a lovely apple pie yesterday. And you can make the dough and you put the apples on and all that, and you can put it in the oven. And the oven is meant to be, I don't know, what is it, 400 degrees or something. But if you put the oven only up to 25 degrees, what do you get after an hour or two of the pie sitting in there? Well, you get warm mush, right? And that's honestly what most people actually do with their lives. Turn the dial up just a little bit, 25 degrees. And they do that versus actually really training your brain to change your skill level. Because it's easier, isn't it? So it's easier to find one stock tip somewhere in the media and just hope that that's going to take you there, rather than actually learning. 15 minutes a day, something you might have. Well, that's literally what it would take you to learn the skill to make your money work for you and your family. And if you want to reap the rewards, and if you want to stop, gambling, because let's be honest, that's what most people are doing here, right? Like, Tom, be honest, right? You bought something, ARK, because it was doing really well, and then it collapsed, and you had no real rules on getting in or getting out. And the market's going up so much the last few years that it's been working some of the time, right? The gambling thing. But imagine for a moment if you could actually have control over your portfolio. You're completely at ease, never worry, and make more money. And if that's something that you might be interested in learning, in acquiring that skill and that confidence, then join me on Thursday Live, and I'll literally teach you that. I can do that in the 90 minutes, 2 hours that we'll have together, literally. So if you head over here, felixprehn.com/webinar, I'll teach you exactly that. And I want to give you one more thing that I found insanely useful. I asked you guys, how much money could you save if basically I put a gun to your head a month? And most of you are saying $1,000 plus, which was kind of what I thought. Let me just assume that you have some initial money. I'm just going to put 50,000. Maybe it's less for you, maybe it's more for you. It doesn't really matter. And you're putting $1,000 in a month. And you're going to do this for 30 years, because that's what most people think they should be doing with their life. And you're going to make 2% a year on your investments. Why only 2%? That's what the average retail investor does a year, 2%. Obviously much less than inflation. Well, how much money would you have in 30 years? Well, $583,000, which in 30 years will make you poor. Now, what if you made 10%, which is sort of the average of this market in the last 20, 30 years, right? Well, you'd have 3 million. That'd be a lot better, wouldn't it? 3 million would be pretty good, because if you look at this, you put in $360,000 and you got 3.2 million just by being diligent, putting $1,000 into an index fund, 10%, right? 10% interest. Does that make sense? Does that make sense? Let me know if that makes sense. Now, what if? I'm not promising you this, but what if you could beat the market just a little bit and made 15% return a year? Imagine that was possible. Again, I'm not promising you any specific outcomes here. Just run through some hypothetical numbers. What happened? Well, you still put $360,000 in there. You saved every month. You got 11.3 million. So you got what? Double your money? You got double your money for taking it from 10% to 15%. Right? So what else will make you think? Well, you definitely don't want to be the 2%er, which is what the average is. 10% would be a lot better. But if you could shift it a little higher than the 10%, you can see that the impact of that is tremendous, right? And honestly, to me, I read an entire book on this, and it didn't really sink in. But once it really sunk in, this is the thing that motivated me more than anything else in the world. And I started putting this kind of a chart on my wall. And I was like, I'm going to get to this number. Obviously, you can change the amounts and so on. But you start to see that you only put in this little blue, the little blue bit here is what you're working for, what you're putting in, right? That's your starting capital, basically. And then the orange is what the market delivers for you. Isn't that extraordinary? So if you deliver a little bit of money into the market and you manage it properly, you're not a bag holder, sorry, Tom, but the bag holding is what knocks you out, because that's what gets you to the 2% return rather than 10% plus. You get extraordinary results. I hope that's a little bit motivational for you to just focus on this. It's far more important than working or earning a little bit more money or any of that. It's really, really important. Of course, it makes you also want to think about all the bits of money that you're wasting in your life, right? Because we all waste money, right? So talk about the guy who's really hates waste, Elon. Well, Grok 3 is coming out today, apparently. And guess what? It's going to be included in all Teslas. You'll be able to drive, you'll be able to talk to Grok. If you haven't used Grok yet, it's an LLM like ChatGPT. And it's brilliant. I use it all the freaking time. Literally, I've replaced Google completely with Grok. The new Grok version 3, I haven't put my paws on it yet, but I'm excited for it. And imagine if you could drive around and you could say whatever you're thinking about, like, what are the 3 nicest restaurants within 10 miles of where I'm driving right now? Wouldn't that be cool? Like, can you adjust put it in the sat-nav, the navigation thing, and guide me there? Great. Could you send him a message and make a reservation? Right. You do that. That's what's coming. Will you be able to do that on other cars? Probably not, because their tech is so freaking bad that it doesn't work. So this is cars are all going to be about software, what it's all about. And the only car company out there that actually has amazing software is Tesla. So one of the reasons I'm long Tesla, also underperformed the rest of the Max 7. Now, something else here that got me very excited, and I tweeted this if you follow me on X. What's your average return, Niels? It sounds really annoying to people. I didn't track it like properly for a long time, because I didn't have to sort of account to anybody. But last year it was 100% plus. The year before was 100% plus, which I know is annoying to some people. But I hope it's maybe inspiring. And again, I'm not promising you 100%. I don't aim for 100%, but it happens sometimes, quite a lot of the time actually. And it's really about structure and systems and risk management. And I think that's where people just lose their money, like holding on to something. People get emotionally attached to a stock, and that's the danger. We just want to be in and out of stocks as we make money. And I think even if you just held a long-term portfolio, I think outperforming the market is actually much easier than people think. The reasons big funds can't outperform the market is they're too big. Right? So if you had $1 billion or $10 billion or $100 billion like the big funds, you can't go and buy, what did we make money on last week? Kamada, right? 10% in a week. They can't buy that stock. It's too small. They would move the stock massively. They wouldn't be able to sell it. They haven't got that opportunity that you and I have, because we've got smaller portfolios. They have to buy, Apple and the big stocks. They just can't. They can't be that agile. They basically stop being. 90% of the opportunities, 99% of the opportunities are not possible for them. Even Berkshire Hathaway. Why are they sitting on $300 billion of cash? Because they have to buy entire companies. They can't just go, oh, let's play with that. Let's play with that, because it doesn't make any sense. The trades are too small for them. So it's much easier for you and me. We have a real advantage. So, yeah, Palantir just got a contract from the Department of Health and Human Services, HHS, and it's $6 million, which is not bad. And it's basically data again, and they have a lot of these contracts already. So we're going to see a lot more of these, I believe. I think we're also going to see an IRS contract coming up. They basically have written one out to upgrade their ludicrously old software system and hardware system. And it reads like it's written for Palantir. So I think as part of this whole Doge effort, we're going to get a lot of Palantir money, like a lot. So I think it's very exciting. I think what's happening over there. We have a market breadth indicator. Johnny, yeah, I think that's a good idea, Johnny. We kind of have it, the MRSI in here. So say you open Tesla, there is a Mansfield RSI indicator down there. That is like, how is it doing against that particular sector? But I know what you mean. It would be nice to have a sector overview. I think that could be an interesting, like just a whole page, right? All the little sector charts or something like that. Yeah, we're working on something a bit like that. We're also working on a lot of like having a news page, and that would then also give you news related to your holdings and your portfolio, which I think would be super useful. There's a ton of good stuff coming out there on that front. Now, this is what I wanted to talk to you about, because I think a lot of you are, Lisa, thanks for the sub. I think a lot of you are going to be reading about this in the next few days. European defense stocks have been going bananas because there's a war in Europe. And with the war in Ukraine ending, or the US certainly stopping their funding towards the war in Ukraine, although I don't think they'll stop it. I think they'll just get something in return. The European stocks are doing really well, and European defense stocks are doing really well. So I wanted to kind of show you a few bits of data here. Last time Trump was in power, he got European countries to actually spend more money on defense, because he basically said to them, you guys are taking the piss. We're paying for everything. Why aren't you, right? So you see a little bit of an increase here, right? A little bit of an increase there in spending. But there is still a huge gap to the US, which is what that blue line up there is the US. This blue line down here is the EU. This little increase here is called the Ukraine war. Which, by the way, people sometimes say to me, oh, you shouldn't be, you shouldn't want the war to end. I totally get that people want, the right side to win and all of that. But in the meantime, what happens? 20-something-year-old Ukrainians die every day, and it's a tragedy. And I think for that reason alone, we should end it. So I'm not a fan of war. I don't think anybody ever really wins war, unless you're a defense contractor, in which case you do. But nobody else ever really wins in war. War has two losers, both sides, inevitably. And lots of people die, and it's bloody awful. So I think it'd be a good thing for this war to end, like any war, really. So I think that's going to happen. Now, what is therefore going to go up? European stocks have just seen the biggest inflow in money in 24 months. A long time. I'm not a huge fan of the European economy or European anything, really. I think it's a total shit show, to be polite with you. There's no innovation, there's high regulation, there's high tax, and there is a general, like, stick your head in the sand sort of atmosphere around there. But it's possible that it's going to rally. Now, there's some high quality names in Europe that I think are always worth looking at, LVMH, that sort of type thing. There are a few others, but not that many. The whole NVO stuff, I'd be a little cautious on at the moment, because it depends on just how much, well, RFK hates Ozempic and all that stuff. Makes a lot of sense that he does. And as for European defense stocks, I think Trump will make European companies buy American defense goods. Because why would you want them to buy European defense goods, right? So he's going to make them buy American planes and American drones and American ships and American ammunition, which they already started to do during the Ukraine war. So I think more of that money will flow to the US than to the Europe. That would be my thought on that. So I'd be a little careful and cautious on Europe, but maybe I'm biased. That's entirely possible. Maybe Europe will buy Palantir after the war ends. Yeah, I mean, we know European countries like France and the UK and Germany are using Palantir, but they're not willing to admit it. Ivan, you want to see what's that you're saying there? A price graph historical for options. What do you mean? You want to see historic options pricing? What, for each strike? Let me know what you have in mind there. I love input like that. Let me know what you're thinking, and I'll take a screenshot. Pavan, appreciate you. Scott, you're thinking the same thing. Yeah, I mean, you know, Trump is an America first president, and I think he will do exactly that. So we already saw, you know, Europe was making its Eurofighter and all of that, right? The French and the Germans making something together, which never bloody works, but they've been buying American planes already, American helicopters already. So I think there is a shift there in that, and the big winner out of the Ukraine war, quite frankly, is the US. Yes, they paid some money for it, but that was mostly American weapons systems. So American weapons contractors made a lot of money, and now they're going to get raw materials for it, and Europe is going to buy American weapon systems and put them into the Ukraine. So who wins? Defense contractors. So who starts these wars? That's what you have to ask yourself, right? Trade Vision would love to see my entry point when looking at the graph. Yeah, that's something we have definitely planned, my friend. So at the moment, you can see that in the stock tracker, right? So if you go into the trades function here, which is still a better version, which is why it's labeled like that. And you see, you know, you can see your trades like this, right? So you see, like when I bought this DOM H, which I was posted about a little while back, you know, you see my buys in green and you see my sells in red, right? So you see it on there. But I know what you mean. It'd be nice to toggle that on the main chart, right? And that's definitely something we are going to do. Be able to see that the historic price. Ivan, okay. Yeah, we're gonna bring in something that'll help you with your option stops. We're working on something there, but I'm still not quite sure how would we visualize that, Ivan. I'm struggling a little bit how to imagine that. Erica, appreciate you. Thank you very much. Rheinmetall is booming, says Luftier. Yeah, a lot of the German ThyssenKrupp also is flying. A lot of them are flying, it's true. Can you make Trade Vision an app for phones, Nicholas? Yes, it's coming. It's literally, I've been saying it for a while. It is in the final stages of birth. It's coming. It's been a long and tough labor, but it's coming both for iPhones and for Android at the same time. DraftKings dropped like a rock, didn't it? Drop it like it's hot. GFKN, what's the ticker? DraftKings, here we go. Earnings sucked or something, didn't it? It's up 15% here. No, earnings were good. Why are you saying it dropped? You said it dropped. I'm mixing it up with something now. So that was a pretty sweet jump up. I grant you that. Not a breakout? Yeah. Something like that. We take a little line here, and you know, if you know what I'm talking about, masterclass wise, something like that. I mean, it's not the cleanest in the world, but it sort of is. And then volume the day before. It's not always interesting that it always pops the day before and then it pops properly here. Always interesting. So yeah, that's a very, very bullish sign there. Now, has it run too far? Look at history. Yeah, we've been higher in the 60s and so on. Little bit of resistance here from the bag holders. Tom, any of your friends in DraftKings? I think Tom's left the building. I think he's annoyed with me. Fix the iPad experience, Scott. Well, we'll fix that alongside it because you'll be able to use the app now. Browsers with very small screens can be a little bit challenging. Anonymous, you're working for my podcast. That's kind of you. Thank you. Ivan, we are going to put in historic IV percent. That you're going to be able to see that, which I think will be super useful for us options nerds. Jago there, amazing. I love that you guys are using Trade Vision and getting good value out of it. And for any of you guys who want to join that Trade Vision team there, here we go to felixprehn.org/Trade Vision. Link is also down below. You get our insane breakout indicator, which is super, super cool. And also a huge amount of other stuff. And we keep adding things, and we keep adding it for free for all the people who've been around with us for a while. So if you join us now, you're going to get all those upgrades, including the apps and everything thrown in there for you. And look how nicely, for example, on this one, we called the breakouts here and here and there and here and there on balance. Yeah, pretty good stuff, right? So definitely worth checking that out. What do you think about the CNN market sentiment indicator? When everyone's fearful, yeah, you want to buy. When everyone's panic, when everyone's euphoric, you want to set tight stops, and you want to make sure that when it does go down, which inevitably does, you're prepared to take profits, right? That's really, really important. Today is President's Day, I understand. I don't really know what the history is of that. Some of our American friends undoubtedly can enlighten us, or somebody can ask Grok. But I don't know what it's about. What's President's Day all about, my American friends? We don't get taught that sort of thing, you see. BBAI, yeah, it was a nice breakout here. It was a good call again, wasn't it? You could have bought it at below 7. Now it's trading at 9, so it's a pretty good setup. And the volume here is pretty impressive, but I mentioned this on the weekend. You see the trend of volume and the trend of the stock. Not good when they go in opposite directions. It indicates we might be peaking. So I'd watch the volume here very, very carefully. Scott says, was for Washington and Lincoln, who were both born in the early part of the year. Okay. It was sort of a combined birthday celebration type thing. Birthday of Lincoln, says Alison. Okay, appreciate that. Thank you. Okay, it used to be for Washington, and they sort of watered it down to please everybody else. What's Mohammed throwing money at? First and 16th presidents. Okay, all right. Bit random, but it's up to you guys. Some of you guys still want to buy AMD. Basically, it's very simple. Talk to Tom. If you buy stocks that keep falling, what do? You lose money. And now you might argue, well, eventually it's going to go back up, right? So you're thinking that you think this is the bottom, right? So you say it's going to do this for a while, and then it's going to go up for a little while, and it's going to do a bit of this, and then it's going to do a bit of that, a bit of this, a bit of that. And say you started buying here, right? So that then in, I don't know, 2 years later, you're back to 0, right? You celebrate. And you start telling your wife about this position that you opened 2 years prior. What's the problem? Well, over the last 2 years, the stock market's done what? Stock market's up about 50% last 2 years. The problem is the person who simply bought the index, just the S&P 500, is up 50%. He's 50% richer than you. Yeah, let that sink in. 50% richer than you. So you are not actually at 0. You are actually at minus 50%. That's a problem. Because if you had 50% more money, you could still open the AMD position here, where you are at 0, right? Once it's recovered. And you still have 50% more money you could put into something else. So this whole like hodl thing and diamond hand thing and something is really retarded. I mean, really, really, really stupid. And it doesn't mean that you are stupid. It's human psychology to buy something and not want to sell it. Like I've literally taught like 10,000 people or something. And every one of us has it. I have it too. And I have to fight with it. And we therefore set up certain automations so we don't have to think about stuff. Like I get knocked out of trades all the time. I don't want to get knocked out of, but I'm very happy that I get knocked out of it because I understand that the opportunity cost is way greater. Hold on to this thing for a couple of years, right? What about SIP every month to average it out? No better, really. You're just putting in smaller amounts of money into a falling knife. It's still the same thing. Like, why buy something that's falling? Like, there is literally not a single professional trader, maybe if that convinces you, who would do it. So the only people who do it are usually people who want, headlines. Now, would you ever buy a dip like that? If you had some inside information that they've just cured, cancer, and only you knew this, then yes, absolutely. But that's probably not the case. So it just doesn't make sense. It doesn't make sense to buy something that's falling. What's cheap? Right? Was it cheap at 200, or was it cheap at 150, or was it cheap at 110? Well, zoom out a little bit, and stock was trading at $55. It was trading at $37. Stock could trade at $10, at $1, could trade to $0, could go bankrupt. Right? It's all possible, like with any stock. So just don't think something is cheap and is therefore going to go back up. Like, especially if it has a long history of falling. We call it falling knives, and people hate it. I pulled up ARK just now, right? The ARK stocks, and people were throwing things at the screen. There were people screaming and going, no, don't show me this. Why? Because it reminded them of the horrors of owning this thing at, what was it, $158, and it's now trading, it was at 29. They remember that pain. They don't want to touch this thing. So who's going to buy this on the way up? It takes a really long time. It took from 2022 to the end of 2024. So it basically took like almost 3 years for this to start moving up again. And it's still only trading at $67. It's trading up here at 160. So my rule is every 10% drop in a stock is the equivalent of one story in a building that you fall out of the window of. 10% down, first floor, you're right. Second floor, not so good. 8th floor, coma, right? 10th, 9th floor, so 80% down, you're basically dead, right? 70% down, 7th floor, again, probably coma for a couple of years. And that's just what happens with stocks. So I just don't follow this social media nonsense of buying something cheap. What about Rivian? It's not about the same chart. And I think that's another thing that, we sometimes have to learn the hard way. And, for me, I got quite excited about NIO, for example. And then obviously geopolitics and everything else got in the way. And you got to learn from those experiences. Like, this is a stock that was trading at, some sort of horrific number up here in the 170s. Now it's trading at 14. And the next Tesla is Tesla, right? Next NVIDIA is probably NVIDIA. Next Microsoft is probably Microsoft, right? The next Coca-Cola is Coca-Cola. Like, it's much, much easier for those guys to do it than for anybody else to do it. So no, I wouldn't buy Rivian. I wouldn't buy it. It's consolidating, yeah, doing this, but it hasn't broken out of anything meaningfully. And I'm telling you, there's still a lot of people back holding this, and they're going to sell when they go back to zero. But this has been going sideways since like 3 years now. Ivan, the watch list button there is coming as well. We're working on that. We just wanted to put the watch list out really quickly. But yeah, we're definitely going to have a little button there so you can add them and you can remove them. And that's all coming. Cool is arguing that because AMD has less shares, less likely to drop. I'd say the opposite's true. It moves more easily. A couple of people sell, it moves more quickly. If it's a very large stock with very large institutional holdings, it's actually harder for it to drop. That's the way I would look at it, but you might well be right. How do you find such stocks, says Niels? Well, the first thing is, if you just want the tool, Trade Vision, there's a link at the bottom of the screen. We literally have a screener, sends you an email every day as well. That's where Kamada popped out. I don't remember what the date was, but it was popped up in this list. The second thing I would then, drafting is on here, for example, as well, Roku. The problem is so that people always think that they need the tool, right? So there's a bunch of things that you need to be a good trader. You need a tool to find them. Yeah, sure. That's one thing you need. What else do you need? Well, you need a strategy, right? And then what else do you need? Well, you need the right mindset. And I would actually put them in that order. So I would say you need the mindset first, then you need the strategy, and then you need the tool. But for some reason, everybody wants to start here with the tool, and they think that's the answer. But they have the tool, they haven't got the strategy, so they haven't got the exit rules, and they don't know what to, which of these on the list is actually the one that maybe we should be buying. And then if they are in it, and then say the stock starts dropping, they will be like, oh, it's getting cheaper, let's buy some more. That sort of mad thinking, or they goes up and they never ever take profits because they think taking profits is a terrible thing. That's kind of where the mindset comes in. So really what you want to get is you want to get the mindset, and you want to get the strategy, and then you want to get the tool. But by all means, start out with the tool. There's a free trial to Trade Vision, and at least it'll give you something to play with. If you want to get the mindset and the strategy, then come and join me on Thursday morning, New York time, 10 a.m., and I'll teach you for free. That's the whole intention of that. Sort of probably run for 2 hours, and I'll walk you through that, and I'll focus much more on strategy, but also on mindset, because the two go hand in hand. So this is really where we need to be. This is where we make the money. This is where you make the most money. You don't make any money unless you have a strategy, and then you need a tool so you know what to do. Like I used to browse through 2,000 stocks a week. That was tedious. Now I look at a list and it takes me 15 minutes rather than 2 hours. So yeah, I hope that's helpful. Metatonics, 100% mindset. Yeah, absolutely. And it's counterintuitive because you have to do things you don't want to do all the time. Yes, which is why I think it's important that we automate them, because it's really hard. Fox Gaming, why did someone call me? Did you try to book a call or something, my friend? In which case, maybe one of my team might have reached out to you to try to help you schedule something. That's entirely possible. T-Ray says, every time I lost real money, I broke my rules and regretted it. Yeah, and it's hard not to break your rules. It is, which is why we focus so much on rules and then reinforcing that, printing it out and practicing it with zero risk and simulated trading and so on. And also why I'm such a firm believer in that you actually need a mentor, because if you have to show your portfolio to somebody at least once a week or every day, if you like, you've got accountability. And he's going to be like, well, what's that position? Why have you still got that, right? Why didn't you get out of that? And it forces you into better hygiene, essentially, which is what I sort of call it. How often do you reassess your stop loss? Weekly, or if there is a big move? So say, I don't, but if I was holding Beam, if it was up 13%, I would look at my stop and I'd see if I want to move it up. Similarly, if it was massively down, I would look at the same thing. So I don't really care about the stocks unless they've moved significantly. So if this was my portfolio, I wouldn't really care about any of these. Or that one, minus 11%, I'll have a look at that one. And I'd wonder why it hasn't triggered my stop. So it really takes very little time. Very little time. You can do it on a Sunday in 15 minutes, or you could look every morning for 5 minutes. T-Ray, you review it every weekend. That's a very healthy thing to do, and weekends are great for that as well. Top 5 fundamental rules to find long-term picks. I mean, for me, the chart rules still apply. I think if you want to go fundamental, if you want to become a fundamentalist, there's a bunch of things I would look at. Gross margins, which basically tells you how hard is it to replace that product. You generally want those to be over 60%. Now, if you're manufacturing, that doesn't work. So Tesla has 18% or something, but it's probably going to get there with software. I would look at interest cover. So can they pay their debt? That tells you quite a lot. I would look at EPS, like a long-term growth. Are they consistent? So do they have like one good quarter and the rest of them are all rubbish, or are they really consistent? That tells you quite a lot about management quality. What else will I look at? There's a bunch of stuff, obviously, but I'm just trying to simplify it because I'm only allowed 5 here. Cash flow margin. I would definitely look at cash flow because you have a lot of great businesses that never actually produce any cash. It's really extraordinary. Say if you're a retailer, right? You sell more, you need more money now to buy more goods. So it's a problem. So I don't really like those kind of businesses. So yeah, I'd probably start with those 4. We could always add a few more to it, but that's kind of what I would look at as an initial screener there. If you want to take a screenshot of that, feel free to, or write it down. Dave's asking, how do you choose which breakout stocks to buy? Well, come and join me on Thursday for the live masterclass. And we have a lot more time to kind of go through that. In a nutshell, though, once you really understand the rules, so I look at, double check the rules. And then I look at, I would really, let's say it comes down to experience. And I know it's an annoying answer, but you can learn experience. You can't learn experience in 15 minutes, but you can learn experience in weeks. It doesn't have to take years if you have somebody who's got the experience and is willing to share it with you. And that's why I'm such a big believer in mentoring. Like I would not be doing what I'm doing today without my mentors because, well, they've been doing it for 20, 30, 40 years and I haven't. And that's how I learn. And that's why I give you guys, if you wish inside our mentorship programs, access to those very same people, because I think that's really important. It's really important to have somebody to look over your shoulder. Church there, Archer. Yeah, I'm quite bullish on Archer. Well, I'm nibbling on Archer. That's what I've done so far. We have a little position open on Archer. When I say we, I mean Winston and me. And I think I bought 5,000 shares of that or something. And it's a slightly early entry, I would argue. So I see that purple line I drew there. That was sort of my justification line. that's the trend line, which is, I think it's fair enough. Volume has popped quite significantly compared to where we have been, but it's not like super classic entry. We also have, that resistance here from there to deal with. But I think you just think through the whole drones thing. If you think through what Elon's been saying, if you think through what they're doing with the Department of Defense, they're going to reallocate a lot of spending. I just think that drones are going to get a lot of money, and I think Archer should be very well placed to mop up quite a lot of that. Pain is the greatest motivator, Sir Scott. Yeah, it really is. I think if you ever have something bad happen in your life, it's sort of, you always have to be grateful for it because it's actually what pushes you forward the most. Tough times create strong people, right? That's what Tony always says. But about the rug pull in Argentina, yeah, I don't really know the full story there. I don't really know. I mean, to me, it screams a little bit of, was he set up? I don't know. I don't know the chap, so I can't really comment, but it seems a little odd. It seems a little odd. That's what I would say. On Archer there, yeah, I agree with you. Now, if it were to drop significantly, I have a stop loss open on this, right? I'm definitely out. There is sort of an obvious support line here. If you want to be a little bit more gung-ho, there's one sort of down there somewhere as well. But yeah, if it drops, I'm out, and then I'll get back into it when it picks up again. And I think that's really the important thing, that we don't get emotionally attached to our stocks. Yeah, I think the commercial drone aviation is going to take a while because of regulation. People feel weird about having stuff flying over their head. But military use is just so logical, right? Like, why the heck do we have pilots and fighter jets? It's insanity, right? So they should all be remote. They've been building remote ones for like more than 10 years, so it really makes no sense. And it's a quantity game right now. Bernie's saying you own all the flying taxi companies. Yeah, I think that's going to take a while. I think let's get autonomous driving on the road first in 2025, and then I think that'll be the next step, but it might take an extra 5 years or something like that. Buying stocks, not options. I did. I can't remember why. Maybe there wasn't a lot of options volume. That's usually why I do that. Let me go out a little bit here. Let me have a look. Yeah, that's very little. So if you go like long time out, they're like 780 options, which really is nothing. So I think there is just not enough volume for that. That's why I did the stock. Yeah. Steve, appreciate you. Thank you. Alrighty, my friends. Any other questions, my friends? If you haven't, come and join me on Thursday. We're gonna have a lot of fun at felixprehn.org/webinar. We'll run through exactly just strategy and mindset, and we'll run some real trades. The market will be open when we're doing it, so that'll be really good fun. And my intention is to give you about 2 hours of my time and really drill you through the mindset and the strategy of when do we buy stocks, when do we buy breakouts. That breakout here, should we have bought it, yes or no, and then how do we exit? And I think if you learn that, it's gonna be tremendously helpful. So come and join me. Sign up, felixprehn.org/webinar. It's completely free of charge, by the way. What's the outside of your pictures called? It's just me painting, really. That's really all that is behind me there. You mean those? It's a bit dark at the moment, but it's just sort of abstract oil, really, and the madness that goes on in my head. It's very, very good fun, actually. It's very good fun. They're all around me. Blake says, chat is only for paid subscribers. Questions from the plebs are not read. Sad. What are you talking about, my friend? The chat is restricted to subscribers because it reduces spam, but we don't really have paid people, hardly do, because I don't really push it. I don't think. Kind of some of you, but it's like a couple of bucks or something. But no, it's complete nonsense, my friend. Do I answer every single question in the chat? Not really physically possible. So I try to pick out the most interesting ones that I think are going to be most interesting to most people, really. Big hugs to Winston. Oil or acrylic? Oil, my friend. Scott, I'm not. Acrylic is quite chemical. I'm a bit of a keeping it natural freak, so I use natural pigment, and then I pour my own oil on it, and then I do that. A bit old school, and that way I know that there is nothing, nasty stuff in there. Whereas in a lot of the paints you buy, especially acrylics, I think there's quite a lot of nasty stuff in there. So no, it's why I make mine with my own paint. Mark, welcome, and Adrian, say hi to Tom from me. Scott, purist. Yeah, I'm a bit of an oddball, if you hadn't noticed. So yeah, I used to also make my own, scratch my own canvases and all of that, but that's a bit tedious, so I started to order them. But yeah, the paint part is definitely a fun thing. Oil is sort of nasty too, though. Not really. Like if you can literally just get walnut oil. So I literally just get organic walnut oil, like from a supermarket, and doesn't yellow very much. And then I get these mineral pigments from a supplier somewhere in France. It's all very easy to organize. And then I pour them together and I mix them, and then you've got oil. It takes ages to dry. It takes months to dry, but it's very satisfying. So there we are. I love you guys for tuning in, and keep learning. Join me on Thursday morning, live straight after the live session here, felixprehn.org/webinar, and we'll run through some real strategy. We're going to have a ball. We're going to have some fun. Some of you guys also asked me to explain the VIX trade, which I will do. It's the one trade I pretty much always have open all year round, which is a brilliantly simple, well, it's not that simple. It's a little bit advanced, but I want to share that with you. Better oil than gag juice. It's both pretty good. You bought Sony yet? No, I haven't. Maybe I should look at that. As Christina says, let's make 2025 our best year ever. Or yet, indeed. So let me help you on that on Thursday.